Hello, financial fans. Another week has gone by, and for the year to date, I still am behind. I'm down about 10%, 10.02% for the year to date. The S&P 500 is down 12.07%, so I am beating the S&P 500, but I am losing value this year, and losing more than 10%. That's a down year for sure. But there's lots of reasons looking ahead to think that there will be some up days in the not too distant future. Things like I think they have holidays toward the end of the year when people spend money, and all kinds of things could happen. And some of the stocks we're going to look at today, stocks to consider. And by the way, I am not a financial advisor. You pick your own stocks if you decide to get into the market. And the best time to get into the market, I can at least tell you that, the best time to get into the market is when the market is down. You can buy at a low price. Stocks are on sale, and hopefully when the market goes back up, you sell these stocks and you make a profit, and that's how the stock market works most of the time. Not so far this year. We're going to look at some companies here that are interesting when we check the numbers, and we're going to begin with Goodyear Tire. I've owned Goodyear Tire off and on over the years, and it's what I call a yo-yo stock, or a roller coaster stock. It goes up and it goes down, and it goes up and it goes down, and it's somewhere in between right now. It was up 5% on Friday when it closed at $13.23 a share. And I still think it's a bargain, as we shall see when we look at more of the numbers here. 2/3 of the way down, column on the left, 52-week range. $10.33 was the low for the past 52 weeks, and $24.89, which seems to be a more normal price for this company. $24.89 was the high for the past 52 weeks. We look at the average volume, 4.6 million shares trade every day, and the experts think that Goodyear Tire, symbol GT, Goodyear Tire, is undervalued. Third item down, middle column, PE ratio 4. 4 is very low. Low is good for PE ratio, 4.1. The forward dividend and yield, no dividend, no yield. And the 1-year target, $17, which is a big move up from $13. I think it's got a lot more headroom than that. It could probably surprise everyone. $17.55. Goodyear Tire. They make tires. In good times, people buy cars with new tires on them. That is good for Goodyear. In bad times, people buy used cars with tires on them. That's good for Goodyear. Just any of you who are thinking about purchasing stock or getting in the stock market, just take a look at these stocks I am mentioning to consider. Next, we look at State Street Corporation Financial Company. STT is the symbol. 52-week range, $58.80 was the low, and $104.87 was the high over the past 52 weeks. The average volume, 2.7 million shares trade every day. It's considered to be near fair value. PE ratio, third item down, middle column, PE ratio under 10, 9.77. It has a small dividend, which is even smaller when we think about the inflation that's out there. 3.5% is what you get for holding on to this particular stock. 1-year target, $80. That would be a big move up. That'd be, let's see, 1/7, I guess about 14%. $80.21 is the target for this stock. And as I say, it's financial corporation, and financial corporation should do well this year, but nobody's done well so far, I don't believe. Next, we look at TX, Turnlum SA, symbol TX, and they deal in steel. Steel is worth more than gold as far as a commodity that can be used for something. $34.50 per share is what it closed out on Friday. Then it went up 32 cents later on, and that's almost a whole percent that it went up after hours to $34.82 per share. 52-week range. $29, we'll say $30 was the low for the past 52 weeks, and $56.86, about $57 was the high for the past 52 weeks. Average volume, now this one does not trade 1,000,000 shares or more, which means it could be subjected to some fancy maneuvering by some people, but 396,000 shares at $34.50 certainly puts it out of the penny stock range. And this is one for people who are willing to take an adventure. This is considered to be undervalued. I agree, very undervalued. PE ratio, look at the PE ratio, it's not even there, 1.79. The forward dividend and yield, 7.5%. And earnings per share is $19.25, and they're paying out $2.60, so I don't think they're hurting financially. They're paying out a dividend of 7.5%. The 1-year target estimate, $50.58. This is worth looking at, but remember it's got low volume. Last stock we'll look at is a stock I own, XOM, Exxon Mobil Corporation. I've had it for years. It pays a good dividend, and it has suffered along with all the oil stocks over the past 5 years or so, but it's starting to show some life. $88.45 a share was the closing price on Friday. Then it went down a penny. $88.44 is the price per share. The 52-week range, $52.10 was the low, and $105.55 was the high for the past 52 weeks, so it actually doubled somewhere in that past 52 weeks. Average volume, 26,954,761 shares trade every day. And it is considered to be near fair value. By the way, it didn't necessarily double at any given point in the past year, just depending on how it went up and down. The low is less than half of the high for the past 52 weeks, and it's now $88.45, so it's closer to its high than it is to its low. The PE ratio, 10.1, that's very good, especially for a big oil company like this. 3.87 is the forward dividend and yield, so that again is a low dividend, but at least it does pay a dividend. The 1-year target estimate, $102. That should be easy for them to get, $102.90, with the uncertainty in the oil fields. And I thank you very much for watching.